Firstly, I'd just like to welcome everybody to this webinar. My name is Nathan Batchelor, and I'll be hosting the webinar today alongside my co-host, Neville Hornsey, who's a professional market trader. Myself, I'm a remote analyst for ActivTrades. You may know me from the popular Biggest Market Movers videos on YouTube for ActivTrades. So I'm going to be working through 5 key segments today, and they're really going to be breaking down the new ActivTrader platform, and you're going to be working through how to use the watch list on the ActivTrader platform, because obviously there's a lot of traders out there who have never used the platform. It's relatively new, so we thought it'd be a good idea to run you through some of the key new features on the ActivTrader platform. And then we're going to be showing you how to open a new position. Obviously, that's vital for new traders, and we're going to show you now that it's incredibly easy to do. Then we're going to be talking about the new market sentiment tool, and this is a really cool new feature that ActivTrades have added to the platform, and it's something that you can incorporate into your trading. Then we're going to be talking about the key features currently affecting the US dollar Japanese yen pair. I know my co-host Neville has got some really good charts for traders who like comparison charts. So we'll be looking at the key factors affecting the US dollar Japanese yen pair and the correlations. And then I'll be looking through the major technical levels that you need to know on the US dollar Japanese yen pair. Obviously, anybody who's aware of the work I've done previously for ActivTrades knows that I'm big on technical levels. And obviously, the US dollar Japanese yen is very topical at the moment, and there's a lot going on in the currency pair. And likewise with this webinar, we've got a lot to get through today. So first of all, I'm going to, before I introduce myself and Neville introduces himself properly, we're going to be running through the risk disclaimer. So please just bear with me for a minute, and we're going to get the risk disclaimer up here. So CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. The information provided does not constitute investment research. The material has not been prepared in accordance with the legal requirements designed to promote the independence of investment research, and as such, it is to be considered to be a marketing communication. All information has been pre-prepared by ActivTrades PLC. The information does not contain a record of ActivTrades prices or an offer or solicitation for a transaction in any financial instrument. No representation or warranty is given as to the accuracy or completeness of this information. Any material provided does not regard to the specific investment objective and financial situation of any person who may receive it. Past performance is not a reliable indicator of future performance. ActivTrades provides an execution-only service. Consequently, any person acting on the information provided does so at their own risk. ActivTraders PLC is authorized and regulated by the Financial Conduct Authority, registration number 434413. So now I'd just like to take the opportunity to introduce myself. I primarily work as a technical market analyst, but I do obviously follow the fundamentals in the market. People that have seen the series of Biggest Market Movers videos on YouTube for ActivTrades will be aware that I'm very much big on the key technical levels. I incorporate into my style where basically through a lot of practice in charting, I've got nearly 12 years of experience as a technical analyst, so I go through a hell of a lot of charts, and I try to really pinpoint with some accuracy the key technical levels that the market is looking to work in. So obviously, if I see a technical level broken and it's a really important level, then I would expect a certain amount of reaction. I'm obviously looking for a trend, a prevailing trend in the market, or perhaps even a swing trade around these key levels. As regards to my career, I primarily focus at the moment in the retail sector for brokerages, but I had previously worked in hedge fund in the capacity of managing money and also trying to make a return on capital using the strategies that I've just highlighted. So now I'd just like to pass it over to Neville, where he's going to introduce himself. So over to you, Neville.
Thank you very much, Nathan. Hello, everybody. My name's Neville Hornsey. I've put here I'm a macro intraday trader, which basically means that I look around the FX world and look at the news and see if I can find a trade every day. And at the end of the day, I basically close out everything. I trade mainly CFDs on the FX majors, the indices and the commodities. That would be oil and gold mainly. The indices would be the main markets such as S&P, FTSE 100, sometimes a CAC or a Dow, but mainly CFD FX majors. And my favorite pair at the moment is a euro dollar, even though it's range bound. I've known Nathan now for quite a few years, and he was my mentor at my first firm, so it's just nice to be working with him again on this. And so yeah, back to you, Nathan.
Thank you very much, Neville. Nice to be working with you too. So quickly, for all the traders that aren't familiar with the new ActivTraders platform, we're just going to run a few key features for you. So the recently launched ActivTrader platform provides a range of new advanced features, which is really tailored for users with varying degrees of experience in the financial markets. The platform is in keeping with the ActivTrades Meta 4 and Meta 5 platform in regards to the width of the market instruments available to trade and the competitive market spreads that the company offers. Some of the things that you'll see now when we open up the new platform, users will straight away get a feel for the more aesthetically pleasing aspects of the platform with a new graphical design, which is tailored for night and day users. The platform also offers a host of new key features to enhance your trading experience, and it really sets it apart from the Meta 4 trading platform, including the addition of a trading stop loss, a buy again function, the market sentiment tool, which we're going to be discussing later on, a feature which lets you net long all, and also one-click trading functionality for all you scalpers out there. So first of all, I'm going to show you how to work your way through this platform. So we'll begin with the watch list. So first of all, to activate the watch list, you simply move to the middle left of the platform, and you will see an arrow there. I believe the cursor is moving towards it now. So all you simply have to do, just to disable or enable, you just simply click on that cursor there on the left hand side, and you'll see the watch list will appear in front of you. So once you've clicked on the watch list, you are then presented with hopefully a series of different instruments there to trade. So you will have a broad feature of instruments available to trade, where basically you can either create your own watch list, or sometimes when you do open a new demo or a live account, you will have some pre-selected instruments already available to you on the watch list. If you want to create your own bespoke watch list, it's very easy to do. But firstly, ideally, before creating it, you really have to give some thought into the type of instruments that you want to add to the watch list. So ideally, you want to create a watch list that gives you a broad spectrum of the whole market, so instruments that give you a snapshot of what is going on in the market. So for instance, the US dollar Japanese yen pair, the euro US dollar, the S&P index, gold, and US bond yields. So if you want to create your own bespoke watch list, you simply click on the symbol list at the top right hand side, and you will then select the instruments that you want. It's very easy to delete them. It's very simplistic. You just see the arrow to get rid of the instruments off the watch list that you don't want to, but it's like I say, just by going onto the top right hand side there, you'll see the instruments that you can click in through to shares, ETFs, options, metals, commodities, financials, and obviously foreign exchange. To anybody out there who is looking at going through more extensively the instruments that are available on the platform, we're going to be working through that at another webinar, so please bear with me before we work through all the instruments that are available on the platform. So we can really go through that in more detail during another webinar. So once you've created a snapshot of the markets that you want to see, you just simply confirm your choice at the bottom, and a instrument that you have selected will appear on the screen. You are also, once you've selected the instruments that you want to trade, you just can also drag them around any way you want. So for instance, if you want euro dollar at the bottom of the watch list, you can drag it down to the bottom. So perhaps whatever you're trading at the time, which is more relevant to you, you might want it near the topper end of the screen. So it's very simple. So you just click on the instrument that you want, and you just simply drag it around, and obviously put it in there. And you can obviously, I believe it fits around 11 instruments in there at the same time for you to be watching. So yeah, I mean, there's plenty of scope to have a broad spectrum of instruments on there. So once you've done that, one of the key features as well on the watch list is the ability to simply click on an instrument that you want to trade, and it will appear directly on the chart in front of you. So all you have to do is simply just enable it there, chart, and it will appear in front of you there on the larger screen on the right hand side. One of the features I like with this platform is that it gives you the ability to have multiple charts side by side. So once you have selected the charts that you want to trade, you can actually have multiple charts side by side, which is a really cool feature with the platform. And having that overview of different market instruments like this in front of you, say for example you've got the US dollar Japanese yen pair, you can view it on multiple time frames, and that's really handy for technical traders like myself who are looking to monitor key price closes in the market. So for instance, 4 hour, perhaps even hourly, you can watch them at the same time, so you really get a good overview of what's going on one instrument, as well as the watch list, really allowing you to see what's going on in the market. So I'm just going to pass over to Neville now, because he also has extensive use of the platform, being an active trader. And I'm just going to ask you, Neville, is there any key features about the platform that you like yourself?
So far, using the platform, I would say, yeah, like the multiple time frame analysis, where currently we're looking at a daily, an hourly, and a M15 chart. I like the fact that you can clean up the charts if you don't need these grids on. You can also obviously go to, I'm just going to highlight up here, the different types of charts that are available. So I'm just going to erase this and go back to pointer. Yeah, so we can go from being a mountain chart and then go to standard candle chart or bars, everything that you can think of really. I guess we're going to be using the mountain chart on this one later on, so I'll leave it there. Also, you can I think we're going to talk about it in a minute, but we can turn on and off the trading one-click trading type buttons up here. But yeah, at the moment, I would say the biggest feature for me is the ability to easily put a multiple time frame analysis up onto your chart.
Yeah, sure. I totally agree with you there. So Now we're going to be working on how to open a new position in the market. First of all, there are 3 ways to open a new position on the new ActivTrader platform. So firstly, you can trade directly from the watch list, as we've just showed you. So you can just click on the watch list if you want to open a new trade. You can also click on the new order button, which you can see at the top of the platform, and you can also trade directly from the chart. So if you can see the bottom chart there, you can see the buy or sell button. So there's 3 options of how to trade, and that's obviously again a very nice feature for the platform. So with that said, let's go ahead and try to open a market order. So say for example we want to open a buy order in the market. We should see a ticket appearing in front of us. So I'll just go on and click on there to open a new order. Apologies for the slight delay with the technicals here. We have 2 presenters working on it, so we have a slight delay with the ticket coming across. Please bear with me a minute. Yeah, so here we go. The new order has arrived. So you can see, if you click on either buy or sell, you will see a new order ticket arriving. I think the first and the most important thing that you have to do is set your trading volume. So you know, based on the amount of money that's available in your trading account, and also, you know, you have to tailor it to your risk profile. So you can see there, basically in the middle, the volume setter there. So for example, you know, you can set it at basically any level you want, depending on the size available in your account, and obviously the your risk profile. So that's fairly straightforward. From here, ideally, the second thing that you should do is set a stop loss. Obviously, presetting a stop loss order helps you to define a level of risk in the market, and this is done simply by moving down underneath the take profit section there, and you can see the stop losses button there. And once you click on that, you can enter in basically your stop loss level. Again, apologies for the slight delay there with the technicals. It should be coming up in a minute. Yep. So the stop loss feature there, you can see we've set the stop loss order there. Also, when the ticket is in front of you, you can see there is a trailing stop loss option that's available. It's obviously it's not a mandatory feature, but it's really up for traders if they want to lock in the hard earned profits. We also have the take profit option for when the trade reaches its destination or its target. You ideally, once you've calculated the target and the risk reward, it's really up to you where you want to place the take profit. And obviously the take profit feature there is just above the stop loss button there. So you just obviously pencil that in. We also have in front as well, once you've in front of us as well, you also have the ability to set a pending order once you have a ticket in front of you. This is obviously ideal for traders who are going to be away from their screen for a period of time, or they don't want to miss out on market moves, or potentially we're seeing very fast market moves, and you're predicting that price will dip down to a certain level very quickly. You just move up to the pending orders feature there, and you will set in again an order, and you also have the usual commands. So you have the sell stop order, the sell limit order, the buy limit order, or the buy stop order. Obviously, it's very self-explanatory with those features. So you know, again, with the pending order feature, it's ideal for traders who are potentially away from their screens or perhaps working and they don't want to miss out on a market move. We also have the ability here. You have the good to go function, which is called the GTC expiration. And basically, once you've set a pending order, you really want to set in an expiration date for your trade. So if you have got multiple pending orders in the market and you don't want to be over leveraged, or for example, you're going to be away again with the good till cancelled feature. It's a very, very neat feature to have the good till cancel feature, and something that I really like about the good till cancelled feature is that it gives you the ability to actually hone into the hour, so you can actually go in to a specific hour as well, not just the day of setting a ticket. You can actually calculate it. So, for example, today you could have a trade that is penned to expire, say, in 30 minutes time. So, again, for pending orders, the good till cancelled feature is very, very handy for traders using this platform. With that said, Neville, you're very familiar with the platform. Is there anything you would like to add in regards to setting new orders?
It's, well, basically how I use it, I guess. It's the best thing for me is when you say you've got $10,000 in your account and you want to know how much you're risking by doing a 0.1 lot. When you type in your stop loss, I noticed just underneath it, you can see how much you're risking. So if I was to risk 89.3 pips and I was only going to trade 0.1 lots, that would cost me $88.8 currently if I was to have a failed trade. And likewise, if I was to have a very nice target of 1.360, that seems to be where the market goes all the time. You can see underneath that it's just over $70 worth, 71 pips into to the take profit. So that's a really good and quick, easy way of working out your risk. And obviously, most traders would prefer to have a risk reward of not 1-to-1 or less than that, as I've done here. So you can quite easily adjust, so you can make your risk to reward one, visual, and two, very clear in your mind, because it's actually telling you here how much you're going to make or lose. What else was I going to say? Oh yeah, the way I trade is obviously I have to close out at the end of the day. So when you're talking about the good to cancel expiration, I could quite easily have put in a few orders, and with this particular platform, like you said, the fact that you can go in and say these pending orders need to be closed by the end of the day. I don't want to be carrying them overnight.
Totally.
So I don't have to get charged the swap fees. Or if it's a Friday, you don't want them over the weekend because news could come out and you could be either into a very early trade and be unbeknownst to you because your platform's closed. But at least you can set it to a Friday at 9 o'clock and then go to bed, and over the weekend not have to worry about an order opening up because you've left it in there because you haven't done your admin. The idea is to know exactly when you're supposed to be trading and when you're not, and this definitely helps, as you alluded to. What else was I going to say? Yeah, the fact that you can do the pending orders and they've given you a visual representation of what each one means. So like your sell stop, market's coming down, comes to a bit of resistance, you think it's going to break down even further, you put your sell stop, but the actual visual representation underneath the words actually describe pretty well what's going to happen next. Similarly for sell limits or buy limits, you can see the market going up, reaches a level, comes back the other way, which I think is brilliant. The only platform I know that does that at the moment actually gives you a visual representation of not only what does each word mean, but also the monetary risk value in such a clear way. So yeah, that's
Sure,
what I have to say
brilliant.
about that. Yeah, it's pretty
Brilliant.
good.
Brilliant. Right, I'm going to be moving on now to the new market sentiment tool, which is a brilliant new addition to the platform, and I think it sets apart the ActivTrader really from other platforms. So first of all, again, apologies for any delay here, but I'm going to be showing you how to open it. So we go over to the watch list, and you can see there that the top of the watch list, you simply go over there, follow the cursor, and you can see at the top of the watch list the blue button or the white button. So you simply just click on that button there, and you will see the market sentiment tool coming up again. Apologies for any slight delay here, but we should be seeing the market sentiment tool. Yep, we're just highlighting it now. We could see it just coming up now. So just click the blue button there on the right hand side, and we should see it appearing shortly. Yeah, so basically I'm going to be giving a brief description of what this tool does, but basically it gives you a snapshot of what way retail traders are currently positioning themselves in the market. So with that said, why should we pay attention to the market sentiment tool? So when a market is trending, retail traders unfortunately tend to lean against the trend. This means that if the trend is upwards, retail traders tend to be net short, while the market is trending down, they tend to be net long. So we can therefore use the sentiment indicator to validate trends and breakouts in the market. On the other hand, when the market is usually range bound, then retail traders actually tend to do pretty well. This means that we should therefore have a look for key range breaks and pay close attention to this if a large portion of retail traders are leaning against a market move. So for example, we can see recently that a significant amount of traders, when the US dollar Japanese yen pair recently made its move towards the 111.12 area, I believe over 70% of traders were short after we saw the big down move. They typically started shorting it, but again, as the positions unwound and it started taking out key levels like the 108, the 109, the 110, traders were becoming more net short. So we should pay attention to it, particularly if we see a large trending move emerge. Myself, I like the market sentiment tool, and I've really started to incorporate it in my trading because I tend to fade what retail traders are doing in the market. I find it most effective when I see heavy positioning the other way from the trend. For example, I like to trade the euro US dollar. I will typically like to see traders being net short before I enter in that market. So you can see on a variety of instruments there, if you're looking to fade what retail traders doing, something like the US dollar Swiss franc at the moment, 74% of retail traders are currently net short, and you can see that that is approaching really multi-year highs at the moment, or just shy of multi-year highs around the I think the 100 level. So yeah, pay attention for that if you are a trend trader. Perhaps in range bound trading conditions, you can switch it off if you have another system. So with that said, I'm going to pass this over to Neville and ask his thoughts on the indicator.
Yeah, no, thank you. Yeah, so I was thinking about this. When I first started trading, we used to talk about the commitment of traders, and that would be looking to see what the sentiment is of the institutional players. And invariably, I'd be looking at the economic calendar, looking at the data releases, trying to work out whether or not on the calendar, if the news was bad for the dollar, why would the dollar go up rather than down, in line with the news? And a lot of it would be down to the sentiment of the traders. They might have already priced in all of that news and so on. So for a long time, it was kind of hard to work out what the sentiment was. Plus the fact the commitment of traders data is almost like a week late by the time you receive it on the Friday. It's done from early on in the week. So having access to retail traders and specifically people on this platform, their sentiment I guess if we go to the dollar Swiss, like you just said, because the Swissy is kind of a good one. Yeah, so dollar Swiss. You'll be able to see this in a minute, Nathan.
Yeah, apologies everyone. There's a slight delay. There's a
Yeah.
slight delay out there on there, so we should be able to see this shortly.
All right, so on a daily dollar Swiss, we've just made a double top. I'm just going to highlight that double top here. Are we going to break out to the top of that in the near future? Possibly, because if you just look left on your chart, there was a range. We broke down, we popped out the top, we retraced, and now we're heading higher. We just got to, just around the 1.012 figure and then pull back. And yet, everybody is expecting this to come down because they are like 74% of traders on this platform are short. Whereas it's for me, it's just the easy trade would be to buy the dip because we are making, even on like a daily, higher highs and higher lows. So for me, I'm expecting, let's just clear this so you can see it a bit easier. The orders that are up here, I'd imagine if institutional traders are looking at retail traders and most of them are short, the institutions are going to try and squeeze those guys out of their positions, take the liquidity, and then take it lower later. So that's when it's 74% versus 26%. That to me is kind of worrying. When it's 41.59, like in the cable, like in the pound dollar, then it's a bit of indecisiveness, which is kind of good because Brexit is at the moment nobody knows what to do. So the fact that the retail traders here are kind of indecisive as well, that makes sense. But for me, when you sort of see traders positioning themselves short en masse, then that is more of a worry in this sort of situation, especially when we're like so close to the top. Because the amount of times I've been short from the top, which is, I guess people are looking at the big sort of wicked candle to the left 1, 2, 3, 4 about 8 days ago, like sometime last week, and they're thinking, no, this is definitely found resistance, it's going to come down. Maybe it will, and they're right, but invariably the retail traders can get squeezed by institutions, or they just position themselves incorrectly a lot of the time. So that when it's that high of a disparity between bulls and bears, then I definitely try and work out what might go wrong. And if I am to get short, I want to be as high up the chart as possible, so that my stop loss is going to be a lot smaller. I don't want to be getting short down here with everybody else. I kind of want to be short a lot higher up just in case. What else was I going to say? If we are making higher highs and higher lows, and who would be the euro dollar, I guess, would be good for that. If the sentiment for no, we'll stick to the Swissy. If we are making lower lows and lower highs, and the economic data for the dollar was bad, then it would make sense to go with the majority. You don't want to be like the last person buying when everybody around you, including the institutions, are selling. You don't want to be that person. So it's good to go with the trend. You don't want to be fading everything. But I just wanted to make sure that, when you sort of see a sentiment tool, that you kind of work out what could happen rather than just following it blindly, because the amount of times traders follow the crowd and get squeezed and squeezed and squeezed and then wonder why. It's just a known thing that you need to be just aware that retail traders can get squeezed because their pockets aren't as deep as a bank's. That's one. I just want to make sure that's clear that that it's good to go with a trend with everybody and stay with that trend while everybody's involved. But then you have to be cautious of when that trend might turn. You don't want to be the last person in that trend going the opposite way. So back to you, Jim.
Brilliant. So With that said, I'm now going to be moving on to the key features affecting the US dollar yen pair. I'm just going to be giving a brief overview of what's been going on with the pair, and then I'm going to turn it over to Neville, who's got some brilliant comparison charts for traders that like to look through correlations in the market. So, very briefly, we've seen the US dollar Japanese yen pair. It's obviously recovered as we've seen risk sentiment recover in the market. Even though stock prices have recovered, they're still quite volatile. And really, we've seen the recovery in the US dollar Japanese yen pair driven by hopes that China and the United States will either extend the March 30th deadline of the truce agreement that is currently in place, or they will actually come to some form of resolution, which will obviously help the global economy. And that's really what we're seeing. The US dollar Japanese yen pair is obviously seeing it being a proxy for risk on trading sentiment at the moment. And obviously, it's made a huge recovery from the drop that we saw happening in the pair at the very start of the year. So it's obviously expectations are high. If we do see any failure of trade talks, then obviously this pair is really priced for perfection at the moment. So there's a lot of scope for it to move to the downside. But as well, we have to bear in mind that there's two central banks. We have a central bank, the Federal Reserve, which is potentially taking a more dovish view, and of course you have the Bank of Japan, which again is another dovish central bank, and we've seen a deterioration of data. So really, at the moment, it's going to be sentiment driven by the China-US trade talks. With that said, I think that I'm going to be talking about the technicals of the pair afterwards, but before I do that, I'm going to be bringing it over to Neville, who's got some really great comparison charts to show you regarding the pair. So I'll turn it over to you now, Neville.
All right, cheers. All right, so I'm just going to start with the dollar yen. It's kind of a good idea to compare it to the actual dollar index. And here in the blue line, we've got the dollar index, and above it in the orange is a dollar yen. And you can quite clearly that it tracks the dollar index as much as possible. It very rarely diverges away from it. So generally, I'd say if the dollar is strong, you can expect the dollar to take control over the dollar yen, and it will go up as it has been just recently, as Nathan just said. Next, the key factors currently affecting the dollar yen is definitely the different differentials between the rates between the Fed and the BOJ, so the US Fed and the Japan's bank, and they continue to diverge as the last couple of years, the monetary policy for the Fed has been to take it from just above 0 to 2.5, and the Bank of Japan has been the most accommodative developed world central bank, as I put here, because of its use of ultra loose monetary policy. In this next slide, I've essentially got the recent interest rates of when they changed last, plus the inflation CPI changes as well. On the right hand side, I'm just going to highlight them, it'll be a lot easier when I'm talking about it. So at the top, the American interest rate by the Federal Reserve, is currently at 2.5%, and that last changed in December on the 19th, 2018. So just a couple of months ago, really. At the bottom, you've got the Japanese interest rate, the Bank of Japan, BOJ. That's a negative number, and it hasn't changed since the the January of 2016. So for the last 2 years, because the Fed never went down to a negative number, you've always been able to have a stronger dollar versus the yen, just based on that part of monetary policy. And if I just clear this. So that's definitely a key thing to bear in mind, especially when you think of them as funding currencies and safe havens. A funding currency is typically has a low interest rate, i.e. the Japanese yen being so low in the interest rate as it is, and speculators could borrow that funding currency. So they could take out a massive loan in yen, and they'd be charged very little for that privilege. And then they could invest all of those yens, they could convert them into dollars and then receive the higher interest rate of the Fed as it stands now. So that is called a carry trade. And I've put here, works for a limited period of time and comes with huge risk due to the amount of leverage involved. Now, the reason I said that is because obviously, if you've got a bank which is willing to basically give you the money for free, and you've taken that money and converted it into dollars to try and gain interest, then you're not going to be the only person doing that. And a lot of people will get on board and do exactly the same thing. Now, this is fine whilst the dollar is appreciating, as we've seen the last year or so. The dollar has been going higher after a big pullback, and people would have been buying into this carry trade quite a lot and exchanging their yens for US dollars and US bonds. And they're confident to do so because the monetary policy of the Bank of Japan hasn't changed for, like I say, 2 years. And up until recently, speculators were not only assuming, but were banking on the Federal Reserve continuously increasing their interest rates. And it wasn't until around December that they sort of started talking a slightly different policy. So if the yen should increase due to Bank of Japan's monetary policy, you could imagine an unwind in this carry trade happening, as could be said for the Federal Reserve deciding that they might not be going higher into the future as was first muted. Things to watch out for are the news, and I've just highlighted a couple of bits today. The Bank of Japan's Governor Kuroda said he will consider easing policy further if FX moves hurt economy and prices. So that means even looser monetary policy from the Bank of Japan. His mandate is to find a 2% price target. So while he added various steps are available if the Bank of Japan needs to ease further, but must balance the cost and benefits, and that came from the news wires. Uncertainty. Get my teeth back in. The dollar yen was also somewhat temperamental as it initially pulled back and the tepid sentiment, but then found mild support after Bank of Japan Governor Kuroda suggested a willingness to consider further easing. So if you were watching the dollar yen yesterday, you would have seen a bit of a move, and that was because the news that was coming out of Japan was sort of saying the yen is going to be weaker. So things to keep an eye on when you're looking at a funding currency or a safe haven currency like the yen. You have to imagine that there are people out there who are doing the carry trade. So you want to see the dollar rising in price. You want to see the dollar year bonds rising in price, which inversely means that you want to see the 10-year yields decreasing in price. And I've listed a load of others down below. Basically, you want to keep an eye on the monetary policy of both the Fed and the BOJ. One thing to consider is like just stuff like the taxes that the Japanese bank put in place in 2013. So down here, I put the consumption tax in 2013 sent the Japan into recession. That's because it was like against the monetary policy as it was then. Right, so going to other key factors currently affecting the dollar yen. I'm aware of the time because we're getting quite into this.
Sure.
Right, as per the Bank of America Merrill Lynch Global Fund Manager Survey, February 2019, biggest global tail risks currently to them are trade wars, China's slowdown, corporate credit crunch, US politics, quantitative tightening, and Brexit. So the first one, trade war and US politics, the quantitative tightening, corporate credit crunch to a certain extent, is all based on the US. Then you've got like China, and then you've got England at the bottom there. So I'm going to go through them as well not rapidly, but I'll go through them. The weaker China economy and growth as it is versus the Japanese GDP. So the Japanese GDP annual growth rate is in the blue, and the China GDP annual growth rate is in the black. And it can be said for the last 4 years, China has slowly been losing its GDP output, whereas the Japanese have been up and down like a bit of a roller coaster. But 2018, everyone is on board and going down. What did Japan export in 2017 mainly to the rest of the world? Mainly machines and transportation. So you have to keep your eye on those in the news, especially for us Brits at the moment, and maybe America as well. I think there's just news recently about cars and things like that in America, but mainly in Britain. Honda have just decided that they're going to shut down the Honda plant in Swindon. There was talk about Nissan not bringing a car to the northeast of England due to many things, but it's one of the big Japan exports to the rest of the world, and it definitely that exports of goods affects the yen. Also in today's news, trade continues to dominate global markets as the US and China race to reach a deal that would avert a tariff increase on Chinese goods by March the 1st. There's goes on to say about a deadline of 90 days after President Trump receives the report. So the global trade wars will obviously affect the highest developed countries, especially Japan, China, and the US. The US global trade deficit narrowed recently. So in November 2018, it was down to its lowest deficit in 5 months. It says here that the imports from Japan to the US declined just under 1%, whereas the exports to Japan from the US increased 4.8%. So that's quite a big shift. You got Donald Trump saying about making America great again, buy American. He obviously also wants to export to the rest of the world. And then inversely, China seems to be changing their economy from being a manufacturing and export type of economy to more of a consumer-led one. Japan relies on its exports, so if it's got competition from both China and America now, then the yen is going to be affected by that. Here I've just highlighted what Japan as of 2017 was exporting to America, and again it's mainly transportation and machines. Okay, the next thing that was on that list at the bottom was Brexit, and I put here Brexit is the unknown known, because it's a big risk event that everyone's got their eyes on, and when there's a big risk and a big unknown, you essentially go from that part of the world to a safer part of the world to park your money. And I've put here previous risk events which led to safe haven currency buying of the Japanese yen did include, in 2007 there was a disruption in the US dollar money markets, which then led on to 2008, which was the Lehman Bank failure. In 2010 the European Union was much in the news with Portugal, Italy, Greece, and Spain. And Greece actually went into crisis. So whilst that could have brought down through contagion the rest of Europe, people would have been trying to get their money out of that area and into the Japanese yen. Then you have a Japanese earthquake, which then, like I said, Japan has massive export economy, and if things are disrupted like by an earthquake and infrastructure is put out of place, then that can affect the yen. And back in 2011 also there was a US debt ceiling crisis, and US governments shut down and all that sort of stuff, and that's still going on even just as recently as this month. Right, so looking ahead, possible risk events which could lead to safe haven currency buying of the Japanese yen could include, I should have put, well, I put possible underlined at the beginning. Brexit, that's going to happen. We just don't know how it's going to happen. So it's a massive risk event, and hopefully it passes without too much damage. In 2019, there could be a Deutsche Bank collapse. Hopefully not. They're currently in the news about merging with another big bank. 2019, I put here European banking crisis, Italian budget, French civil unrest, and possible German recession. Europe doesn't seem to be that well at the moment. It seems a bit sick. Last year, Italian banks were definitely making moves in the markets. The Italian budget, and to a certain extent the French budget, need to be sorted via the European Union. There's a lot of civil unrest, so that's obviously puts a strain on the economies that have civil unrest. And I think just recently it was by one day that the Germans averted recession, because the market did drop so much just recently. The talk of global recession is never too far away. So as and when the economy sort of show more weakness, then that's when you can start to look for dollar yen to go towards the yen and out of the dollar. And now we're to the technical levels. So back to you, Nathan.
Brilliant. Thanks for that, Nev. I especially like the key risk events to watch out for between 2019 and 2020. So I'm going to have to fit the technicals in. Yeah, I'm going to have to fit the technicals in quickly because we've got to allow for 5 minutes for you guys to ask questions. So I'm just going to really summarize the trading action going on in the US dollar Japanese yen pair. So at the moment, we're currently seeing that the pair is relatively well bid above the 110 level. The key levels to watch out for to the upside. First of all, we've got the first line of resistance above the 111 handle around the 111.12 area. If we start to see price moving above the 111.12 area, the next area that price will gravitate to, I suspect, will be the 111.40 area, where we currently have the pair's 200-day moving average located. So if we do see price moving up towards the 200-day on relatively little without any bullish news, we can potentially expect that key level to hold. If we see an extension of the trade negotiations past the March 1st deadline, we could potentially see a further rally above the 111 area. You can see here in this chart in front of you, the moving average in red signifies the 200-day moving average, which I've just alluded to. So if we break above there, we could potentially start to advance towards the peaks of the latter part of last year around the 114.40 area, I believe. If we start to hold comfortably above there, it would be very wise for traders to note that there's a large inverted head and shoulders pattern, and that could obviously trigger significant upside in the pair. If we start to move above the 114.40 to 50 region, we can easily advance towards that 115, 116 and 117 levels as it kind of catches traders out. To the downside, you'll see the 20-day moving average, which is located around the 109.80 level. If we start to break below there, we could more than likely see the pair start trading in a much lower range between the 108.10 and obviously the 109.80 level. So at the moment, watch out for that key range break between the 109.80 and the 111.40 areas. That's really where all the action is, and obviously watch out for that trade news. With that, now we're going to turn it over to you guys, and if there's any questions you want to ask in the chat mode, please feel free to do so. Just like to thank everybody for joining us at this webinar, and please catch our next webinar, which we'll be discussing how to manage Brexit volatility, and also we'll be running through some key features of the platform.
Yeah, cheers, guys. I got a question. Nathan, we got a question.
Yeah, sure. Please fire away.
All right, so they're asking if I'm just going to draw it out. The head and shoulders pattern that you alluded to,
Yeah,
if it breaks the neckline,
yeah.
is it going to go to the 118 at the top, or is it going to go beyond? Do you think, based on that inverse head and shoulders?
I would suspect that it depends on the type of news that we see going there. We potentially could get a slight knee-jerk reaction, but if we see it broken onto really bullish news towards the trade talks, we could potentially see it moving towards the highs of September up towards the 118 to 119 levels, where obviously it's got the potential to form a much larger inverted head and shoulders pattern. So yeah, I would at the moment I would say if that area is broken and price is staying above there on a multi-day and a multi-week basis, it's easily got the scope to move towards the 118 level.
Cool. I was going to check see if there's any other questions. No, I think that's it. So I think we should probably wrap it up.
Brilliant. Thanks a lot, guys.
Yep. Cheers. Catch you next time.